Final Accounts Adjustments Part 2. Depreciation. Depreciation is the decrease in the value of fixed assets due to wear and tear, passage of time, or obsolescence. Entry. Depreciation account debit. To asset account. Treatment in final accounts. I. Depreciation should be shown on the debit side of trading account in case of factory assets or profit and loss account. 2. It should be deducted from the concerned asset on the asset side of the balance sheet. If depreciation is given in the trial balance, the depreciation should be taken only on the debit side of the profit and loss account because the asset already appears at a reduced value. Increase in the value of an asset is called appreciation. Appreciation is credited to the profit and loss account and added to the value of the asset in the balance sheet. Provision for depreciation. Sometimes depreciation is credited to provision for depreciation account, also called depreciation fund or accumulated depreciation, instead of reducing the asset directly. Treatment in final accounts. The depreciation of the current year is debited to the profit and loss account. Adjusting entry. Profit and loss account debit. To provision for depreciation account. The total provision for depreciation, existing provision as per trial balance plus current year provision, should be deducted from the original cost of the asset on the asset side of the balance sheet. Bad debts. Bad debts arise when the amount due from debtors is found to be irrecoverable. Bad debt is a loss to the business. Adjusting entry. Bad debts account debit. To sundry debtors account. The bad debt account is closed by transferring it to the profit and loss account. Treatment in final accounts. A. When bad debt is given in trial balance, no adjusting entry is required. It should be shown on the debit side of the profit and loss account only. B. When bad debt is given as adjustment, it should be taken at two places. Debited to the profit and loss account. Deducted from debtors on the asset side of the balance sheet. Provision for bad and doubtful debts. At the end of the year, some debtors may become doubtful. A doubtful debt is one which may or may not be recovered. To show debtors at their true value, provision is created based on past experience. Entry for creating provision. Profit and loss account debit. To provision for doubtful debts account. Treatment in final accounts. A. Provision appearing in trial balance. This is the opening provision. It is shown on the credit side of the profit and loss account. Bad debts of the current year are adjusted against the provision. Provision for doubtful debts account debit. To bad debts account. B. Provision given as adjustment. It is the new provision for the current year and should be debited to profit and loss account. Deducted from debtors in the balance sheet. Provision is calculated after deducting additional bad debts. Provision for discount on debtors. It is a normal practice to allow cash discount to customers for prompt payment. Some amount of discount may have to be allowed in the next accounting year. However, this loss belongs to the current period because the debtors relate to current period. Therefore, at the end of the accounting year, a provision is created for the anticipated loss in the form of discount that is likely to be allowed to debtors. This is called provision for discount on debtors. The adjusting entry is profit and loss account debit. To provision for discount on debtors. Treatment in final accounts. Provision for discount on debtors should be debited to profit and loss account and is also deducted from debtors on the assets side of the balance sheet. The opening provision, if any, will be treated in the same way as provision for doubtful debts is treated. Next video content, Final Accounts Adjustments, Part 3. Topics covered in this video. Provision for discount on creditors. Sales tax. Loss of stock by fire. Goods distributed as free samples. Drawings.
Thank you.